Okay, I think we're on. Hello, and greetings from the headquarters of the International Energy Forum, the global home of energy dialogue. My name is Tom Ashby. I'm the head of communications at the IEF. Today, we're here to launch the publication of a new report on the liquefied natural gas market entitled Fragile Equilibrium, LNG Trade Dynamics and Market Risks. This 30-minute webinar is being live streamed on IEF social platforms and will be available as a recording on our website. So we're pleased to welcome today IEF Secretary General Joseph McMoneagle, who will give some opening remarks, followed by a short Q&A with the two report authors, Alison Cutright, Senior Energy Markets Analyst at the IEF, and Leslie Polte-Guzman, Head of Research and Market Intelligence at Sinmax, which is a data analytics company. So, without further ado, I will hand the floor to Secretary General Joseph McMoneagle.
Well, thank you, Tom, and welcome to everyone to this IEF webinar. 12 years ago, the International Energy Agency asked the question, are we entering a golden age of gas? And it posed this rhetorical question during the presentation of a scenario showing gas demand rising by more than 50% and accounting for more than a quarter of global energy by 2035. In the intervening 12 years, demand for natural gas has grown even faster than the IEA had expected. Last year, natural gas accounted for 23% of primary global energy demand. And one reason for this extraordinary growth has been the rapid rise of LNG trade, which hit a record high last year. So today I would modify the IEA's question from 12 years ago to ask, is LNG taking natural gas from the golden age into a heroic era? Only last year, the versatility of LNG saved Europe from a much more serious energy crisis after it unexpectedly lost access to pipeline gas from Russia. Less sudden, but no less remarkable, has been the role of LNG in Asia. Over the past 20 years, LNG has delivered gas to previously energy-poor regions, helping to reduce carbon emissions and to lift hundreds of millions of people out of energy poverty. Across Asia today, LNG is a vital part of the energy mix. Asian buyers are expected to compete with Europe for new supplies over the coming 5 years, as the LNG market is forecast to grow by another 25% to 500 million tons annually. I'd like to take this opportunity to thank the two report authors, Alison Cutright at the IEF and Leslie Polte-Guzman from Sinmax, and look forward to hearing about what their key findings were in the report. So thanks to everyone again for tuning in, and hand it back to you, Tom.
Okay, thank you very much, Joe. Great introductory remarks, and so I think we're just here for 30 minutes, so we'll jump straight into the discussion. And we've got our two authors with us. So Alison and Leslie, welcome to you both. And I think the first question will address to Leslie. So Leslie, the report says that Europe's import situation will be tense and fragile this winter, but I mean, I thought stocks were full. So can you talk us through the challenges facing Europe in the next few months?
Yes, hi Tom, and thanks for having me today. It's been a pleasure collaborating with IEF, and especially co-authoring the report with Alison, who is not only a great energy expert, but an amazing colleague to work with. So delighted to be here. So to your question, Europe and this winter, clearly the LNG market in Europe remains fragile because of growing geopolitical risk. So wars are back. And what it means is that geopolitics has become the biggest driver in remapping LNG trade flows. Especially, we've seen that since Russia's invasion of Ukraine. But more recently, we've seen a geopolitical risk premium on TTF, for instance, after the Hamas terrorist attacks on October 7 in Israel. And there is still a war ongoing in the Middle East, and regional escalation are not out of the wood. So we see that there are potentially more geopolitical risk premium ahead of this winter. And that said, there are some bearish elements in the market, but I think the bullish elements may be stronger than the bearish one. In terms of bearish factors, we see that there is persistent high inventories in Europe and in Asia. There is subdued demand, and gas demand in Europe, especially industrial demand, is down. And basically, with about 60% less of pipe Russian gas this year compared to last year, the way that Europe has dealt with is, compared to last year, about importing the same amount of LNG, but a lot of demand destruction. And the weather, it's still an unknown, but basically we see, very bearish demand factors. So in a way, I think that the energy security in Europe remains vulnerable and fragile to any kind of supply disruption, despite a demand lull.
Right. Well, I guess with demand growing so fast, even if there are bearish factors, it's a fragile market, as you said in the report. But turning to you, Alison, I noticed that China was an interesting point of discussion in the report, particularly their role as a kind of swing supplier last year, especially when supplies were tight. So I mean, if you could just talk us through a bit what you mean by swing supplier, and also what's the outlook for China's role in the market as the Chinese market now recovers?
Thanks, Tom. Before delving into what China may do going forward, I think it is important to look at the circumstances that helped enable China to reroute some of its LNG to Europe last year and kind of act as a bit of a relief valve when Europe was scrambling for gas. China was able to do this in part because of the slow unwinding of its COVID-0 policies. Natural gas demand actually fell in China last year, and this was the first annual decline in 4 decades. But demand has rebounded this year with the unwinding of the COVID policies, and China is actually on track to become the largest LNG importer in the world this year, surpassing Japan for the first time. But China is also uniquely positioned to offer flexibility to the market because of its significant amount of contracted supplies, its growing domestic production, and access to pipeline imports. China has drastically accelerated its trend of signing long-term contracts for LNG. 5 years ago, China had long-term contracts for around 45 million tons per year, and this is expected to more than double by 2026. Its share of all active LNG contracts is expected to rise to nearly 25% by the end of this decade. Beijing has also ramped up its upstream activity and investment. Last year, China's total domestic upstream investment reached a new record of more than $51 billion, and that was up more than 20% year on year. China's domestic gas production has risen for 7 consecutive years, growing by more than 6% last year and another 5% this year. Domestic production is now meeting about 60% of all domestic gas demand. Additionally, flows from Russia through the Power Siberia pipeline continues to rise. Its flows have increased by nearly 40% in the past 2 years, and it's going to continue ramping up to its full capacity over the next 2 years. Another interesting trend that we highlight in the report is how China has been able to increase its LNG imports from Russia. China's imports from Russia are on track to be 80% higher this year compared to 2020. And part of this rise has been driven by reloads from Europe. LNG that arrives in Europe on Russian icebreakers fleet has been increasingly offloaded and reloaded onto traditional LNG tankers and exported outside of Europe. And a lot of these flows are ending up in China. So China is investing in domestic production, its pipeline infrastructure, and signing long-term LNG contracts. So it's natural to ask whether or not China will be able to play a swing supplier role in the future. I think it's going to partially depend on China's domestic priorities of advancing its blue sky policies and climate agenda. While China diverted some of its LNG last year, it simultaneously increased coal use. And just yesterday, the US and China issued a joint statement on enhancing climate action. So this is going to play a role in shaping China's policy on gas and whether diverting flows will mean increasing dependence on coal. China's decision to be a swing supplier is also going to depend on how it perceives threats to domestic energy security. Most of China's LNG importers are state-owned companies, and supply security concerns or geopolitical considerations could override market-driven decision-making. So even if an arbitrage opportunity occurs at a time when Chinese demand is met, China may decide to limit redirecting or re-exporting LNG if it serves a domestic energy security interest. And I think this conversation is actually very similar to the one oil market analysts frequently have about the role of China's best SPR. And in both cases, I think China's ability and willingness to be a flexible player when the market needs it will depend on its domestic energy security and its own assessment of market risk.
So if I can add quickly to the brilliant explanation of Alison, I think both importers and exporters have to mitigate China's growing market influence because of political risk, potential geoeconomic retaliation. And we see that for the importers, they will rely maybe on what China is able to resell or not into the global gas market. And for the exporters, they may have a demand risk if China decides not to import. We remember at the peak of the trade war between the US and China back in 2018, 2019, China stopped importing US LNG. And so far this year, we are only at 3 million tons, according to our Sinmax Leviathan data, heading from the US to China. That compared to above 8 million tons back in 2021. So we're still not back into what China was able to import from the US 2 years ago.
Interesting. Yeah, thanks a lot for those insights. So, I mean, coming back to you again, Leslie, I see the report looking at the market for global LNG and looking ahead for the next 5 years. You were expecting another 25% increase in the market size, and that's already on top of a new record set in 2022. Where do you, I mean, if you could break that down a bit for us, and where do you see the greatest growth potential?
Mm-hmm. Absolutely. So we see at least 10 new importers expected to join the market, in the next few years. That adds regasification capacity and demand. And most of the players are in emerging regions, especially in Africa and Southeast Asia. We see also some demand growth and new infrastructure growth also in Europe. And that, has been triggered by the removal of Russian gas into Europe. On the supply side, we see also big growth happening and big new waves of new projects coming online. Just this year, in the next few months, we're going to see the startup of about 15 million tons of liquefaction capacity. And that will contribute also to rebalance the market post-2025. And it's only the beginning of a new wave of projects coming into the market. So we definitely see that the US is actually on track to be the world's largest LNG exporter in 2023, very close to Australia. There is still kind of a tie right now. The US is exporting to 36 countries and supporting and surpassing Qatar. Europe has become the largest market for US LNG, with 65% of total US LNG heading to European ports. And we see that the US, or I should say first, North America in general, is going to be a key source of global LNG export growth because we see a lot of expansion of existing facilities in the US, new projects also, but also a few smaller projects in Canada and in Mexico. So we see that the US specifically will add about 17% of export capacity by 2025 and a further 43% by 2028. Beyond North America, the Middle East is also going to grow. Qatar is undergoing an expansion of its capacities. But more or less, we see that the growth of the market is relying on the US and Qatar on the supply side. And we see a race happening with investments and contracting. So we have to look at the buyers now. Buyers want diversification of supply, and they are not going to put all their eggs in the same basket. So what's happening next year, and we already saw some happening this year with a kind of contracting frenzy, it will determine the FIDs and what's going to be in construction in the next 3-4 years for the supply that will come online by the end of the decade. So we expect that North America will still represent about 30% of export capacity, and the Middle East 25% more or less, and then we have Asia Pacific about 23%.
Interesting. I mean, if we could just maybe stay on that topic for another minute. I mean, one issue last year was, I believe that some cargoes were actually re-exported away from Asia when the demand was at its peak. I mean, what's your outlook in terms of demand, and do you think some buyers might be disappointed again? Because that was a big issue, wasn't it?
That's a very good question. We saw, prices, high record levels last year because Europe needed so much LNG and has displaced a lot of the LNG that was supposed to come elsewhere to Europe with a price premium in Europe that attracted most of the supply. Some emerging markets in Southeast Asia, mostly, that were about to become for the first time importers, like Thailand, Vietnam, had to delay their import projects. Countries like Bangladesh, Pakistan had to cut significantly their imports. As a consequence, they had power outages, power cuts. That has been a big issue. They reverted back to coal, more coal usage. However, now that prices have come down a little bit. We're back up a little bit around $15 per million BTU now in the spot market for Europe, around $17 per million BTU in Asia. We were lower earlier this year. Now that the geopolitical risk premium that we discussed previously occurred, but their projects are on track. They are becoming importers. Thailand, Vietnam, this year they imported their first cargoes. We see new opening markets also in West Africa. It's happening because these countries need the gas for various reasons, to displace dirtier fuels at home, for cooking. Also, we tend to forget cooking in those emerging nations. And LNG is going to be a convenient, flexible fuel for power generation, along with renewable in many of those countries.
Great. So you don't see it as affecting the long-term reputation, if you like, of LNG amongst the new markets and the emerging markets?
I think these countries will have mitigation strategies going on. And one of our recommendations, actually, towards the end of the report, is to encourage countries to become what I call multi-fuel hedging. So enabling enough flexibility and security during the transition. We need both the flexibility in the power mix, in the energy mix, that provides energy security. So it means that we need all the above, and we need to invest in energy sources and technology that will include gas and LNG, along with all kind of renewable, nuclear, if possible. And that will, really depend on each country, each region. But the goal is to not, again, diversify as much as possible and decarbonize in a way that would provide both the energy security and the flexibility. So it means covering any kind of risk with it wouldn't be wise to pursue only one kind of energy, one kind of fuel.
Great. Alison, looking now at the kind of more risk side of the equation, I mean, the report touches on some risks associated with various shipping choke points around the world. Where do you see the greatest risks for the market from this point of view?
Well, recently there's been, of course, a lot of press coverage about the Strait of Hormuz, and we highlighted as a major choke point for LNG flows in our report. Staggering 23% of global LNG flows traverse through the Strait of Hormuz, and that's more than 90 million tons of LNG annually. The vast majority, or around 75% of it, goes to Asia. The Strait of Hormuz often gathers a lot of attention, not necessarily because it's likely that there will be a blockade, but because it would be catastrophic if there was one. It is a primary artery for LNG and oil flows, and there aren't really viable alternative routes. But our report also highlights the Panama Canal, and there's also been a bit of press about this recently. Bottlenecks have become a reoccurring issue due to increased container traffic and low water levels from droughts. There have been times when LNG cargoes have had to sit and wait more than 10 days before they could transit through. I mean, only about 5% of global LNG flows actually go through the Panama Canal. In the past, it was common for up to 60% of the U.S. exports to Asia to travel through the canal. But so far this year, the Sinmax Leviathan has shown that it's fallen to only about 41% of U.S. exports. And this is because, again, of the delays and increased costs. But unlike flows going through the Strait of Hormuz, there are viable alternatives for the Panama Canal, although it does take longer. More traders have been utilizing the Suez Canal or going around the southern tip of Africa. It takes about 13 extra days to get to Asia via Suez compared to the Panama Canal from the Gulf Coast. And I think it is also interesting to bring this up because choosing to bypass the Panama Canal can cause a higher utilization rate of tankers since it takes longer to travel, and it also can increase the emissions of transit. And this is going to become increasingly important metric that companies will be looking at. But also kind of speaking of U.S. exports, our report notes the risk of adverse weather on the U.S. Gulf Coast. The U.S. is on trajectory to become the world's largest LNG exporter, as Leslie mentioned. It's accounting for about 22% of global LNG exports this year. U.S. LNG export facilities tend to run at near maximum capacity, and they're concentrated along the Gulf coastlines of Texas and Louisiana. So they're exposed to hurricanes, flooding, or even freezing weather. Most installations typically have multiple layers of protection, but adverse weather has the potential to damage electrical or maritime infrastructure. And we've already seen this with Hurricane Laura back in 2020. It disrupted one LNG facility for 2 weeks, another one for a whole month. So it's definitely going to be something that's going to be increasingly looked at. I think it's also important to mention the risk of cyber attacks. Increased geopolitical tensions and fragmentation really increases the likelihood of targeted, sophisticated cyber warfare. And there have been several examples of cyber attacks impacting energy markets in the past decade, including like the Colonial Pipeline in the eastern US for gasoline, or disruption at Rotterdam that impacted fuel markets. And even this past week, one of Australia's largest port operators was forced to close for several days as it dealt with a cyber attack. This wasn't energy related, but the risk and exposure for energy and infrastructure is similar. So something to highlight. Our report doesn't try to predict where the next disruption will be. But we're just highlighting different areas of risk, and any disruption, whether it's driven by geopolitics, sabotage, climate, cyber warfare, or an accident, can all have like an outsized impact on the market right now because the balance is still fragile.
Yeah, that's a very good point. I mean, as you say, because of the fragile equilibrium, as you might say, any small interruption can have an outsized impact on the market. Well, we're almost out of time, but we've got time for one last question. I think if I can put this one to you, Leslie, and feel free to pitch in, Alison, as well. The report looks at some policy recommendations. Can you highlight some of the actions that policymakers can take to support the energy security and access through the transition, and what role LNG plays in that?
Yeah.
Leslie?
So I'll make first like an overall comment. I think generally speaking is that there is ambivalence around LNG in some regions because of cost concerns, because of net zero targets, and that is expected to persist in the next few years. So for investors, for policymakers, there is a need for a long-term strategy, like how to integrate LNG in a long-term strategy rather than being swayed by short-term market fluctuations. And I think that means that we need to integrate, energy transition imperatives with energy security. And that said, we have about 6 recommendations in the report. One of them, I mentioned it earlier, is the multi-fuel hedging strategy. And I think Japan is actually a key example where Japan is looking at co-firing its power plants with ammonia and coal, but still using nuclear and LNG. And because there is some uncertainty about the lasting restarts of nuclear plants, and also how to integrate and how fast integrate hydrogen or ammonia in the power mix in Japan. So I think there is this need of increasingly of having this diversified energy mix and really not prioritizing one fuel above the other. Second big recommendation is that we see the need to diversify trade routes. Because of growing risk, security, supply risk, geopolitical risk. And when you think about a new importer like Germany, who only started importing in 2022 its first cargoes, it's in the interest of Germany to diversify its supplies, like from different countries, different routes, different entry points, different terminals. And we see that will be crucial going forward to enhance energy security by country and by region, rather than relying solely on one single source or supplier, because that makes countries vulnerable to disruptions. The caveat to that is that we're heading into a world which is increasingly fragmented, which means that there is increasingly more trade between trusted partners. And so there is high value in basically increasing investments, let's say in OECD countries or in more stable countries with more stable supply routes. So that's something that we're watching closely at Sinmax. Maybe I can highlight another recommendation, but I highly encourage our listeners to check the report for themselves, also to read fully all the recommendations. But one of them that I think is important is enhanced storage, particularly across Asia. So Asia is still absorbing more than 75% of 70% of 60 to 70%, depending on the year, of the global LNG trade. With Japan, South Korea, China, of course, and Taiwan as main importers. But these countries, especially Japan, South Korea, Taiwan, don't have underground gas storage the same way Europe or the US have. What they have is above ground storage. And what it means is that those are associated to their receiving terminals. So adding some above ground storage could bring them additional days of security of supply in the event of disruption. And in the region right now, everybody has in mind potential disruption around the South China Sea. some Taiwan escalation between China and Taiwan. So in those circumstances, it will be really important to have enough storage for more than a week if possible. So, for example, in Japan, there is roughly 36 days of available nat gas consumption with above ground storage. For Taiwan, it's only 14 days. That will be the case, 14 days by 2027 with additional storage. So I think any kind of additional storage would bring more security into the region.
Great. Well, thank you very much, Leslie and Alison, for a great summary of the takeaways of the report. Joe, were there any final thoughts from your point of view before we close out the webinar?
No, I don't think so. I just want to thank Leslie and Alison for a great report and also highlighting some of the key findings from the report. So thank you to both, and thanks for everyone for tuning in.
Okay. Well, thanks, Joe. Thanks, Alison and Leslie. And thank you to all of you for attending. Stay tuned to the IEF for more insights into the global energy market. And signing off here from the headquarters of the IEF, the global home of energy dialogue. Goodbye.